Today we're going to be going over the infamous SCHD killer. Now you guys would know about the SCHD killer if you're a weekly listener on the Castle Kings live podcast, where me and my co-host Fiscal basically go over stocks every week. The SCHD killer is a portfolio that he is constructing basically to outperform SCHD and basically an upgraded version of SCHD with higher quality companies in his opinion. The goal of this portfolio obviously is to reach dividend income at the end of the day and have a solid decent return over the long term. So today I'll be going over the entire portfolio, all the holdings, the objectives of the portfolio, and so much more. Did you guys know it's my birthday today? And of course, for my birthday, I decided to release Do Dividend Stocks Not Drugs merchandise requested by so many of you guys. I've been working on this project for the last few months. I'm really proud of how the designs came out, and I promised myself if I'd ever do something like this, I would actually wear the designs or wear it myself. I got the long sleeve myself personally, but there are so many other options that I'm really proud of how it came out. Use code DIVIDENDS till Sunday for 15% off your order, and it actually means so much if you guys actually bought one and supported. Also, if you do buy one, please let me know. Send a picture of you in it, and I'll put you in a video. And it's also my birthday today. Thank you, and the links in the description, and of course, roll the intro.
Hello, I like money.
Alright, and of course, if you guys want me to go over your portfolio, send it to me in the links in the description on Discord. I'd love to go over it. Essentially, just to give me an idea of it, he basically ignored valuation. The concept of the portfolio is to get the same yield of SCHD, but would combine both yield and growth to outperform it in the long term. SCHD, in my opinion, is a good ETF, but I don't think it's as good as the S&P 500 straight-up index funds, which is kind of an area of concern for me potentially. With that said, though, it is a dividend income ETF, and it has offered some solid yield and growth. It has some companies that I like in the portfolio, like AbbVie, and some companies that I don't like that much, like Ford. Right now, the SCHD Destroyer has a 3.419% dividend yield. It has 50 holdings, and since July 27th, it is down 9.9%, which is pretty much the same as SCHD at the moment. I think it's important to also keep in mind that SCHD has 100 holdings in it, so this is half of what SCHD has when it comes to the holding size. Alright, without further ado, let's jump into the holdings. To start off, all these holdings are 2% of the portfolio, and I would assume that they're automatically trimmed and sold whenever it goes above or below or bought. To start off, we have Vici making up 2% of the portfolio. I definitely like this one. I think it offers a really solid variety, whether it comes to yield and growth, especially at the current prices they're at. Vici actually went on a bit of a dip below $27 and hit that $26 range, and unfortunately I missed that dip. So with Vici, I think it's a really strong holding to have in the portfolio, and I think it offers yield and growth, something that could be rare, especially with REITs. Next is Walmart, and Walmart doesn't have great yield and it doesn't have great growth. I'm not a big fan of Walmart stock whatsoever, and I'd actually prefer Target. So I'm definitely not a fan of Walmart whatsoever, and I'd actually like to see it in a potentially better retailer, maybe Dick's Sporting Goods. Hear me out there. Next is Walgreens, stock ticker WBA. I think this is obviously more of a value play, but I'm not a huge fan of Walgreens whatsoever. It's definitely a recovery play, and I'm not a big fan of it overall, and I don't know the security of the dividend in the future. Next, he has Verizon, stock ticker VZ. I don't think Verizon's going anywhere up or down, really, if I'm being completely honest. Their dividend will always stay the same, that 6-7% yield that they historically have, but nothing's going to really happen with it. So, I mean, if you're looking for that dividend income, yeah, it's a good stock to have in here, but I'm not a fan. Alright, let's get down to business. Next, he has S&P Global, which is a company that I've been flaunting on this channel recently. It's a company that I've recently bought into in my portfolio, and I'm a really fan of their business model and how it's really structured overall. The world's always going to need data, and it's just a company that's a toll booth business, which I talked about in one of my most recent videos, links in the description. Then he has another company that I really like, which is UNH, United Health Group, which is the healthcare giant. And when I mean giant, I mean absolute giant. Unfortunately, it didn't hit my price where I'd like to specifically buy, but I think it's an amazing company, and if it goes to the 450s and 460s, I'm definitely going to be buying. It's a company, though, with that said, I do got to do a lot more research on me personally. It's an absolute giant and behemoth of a business, but you got to understand it, and I just don't feel great where it's at right now in my mental state. So, I got to do more research on it. Next, we got Union Pacific, stock ticker UNP, and I like this play definitely. I think it will offer some solid growth, especially for in the railway industry, and some decent yield. I own UNP right now, and I'm looking to buy below $200. Next, he has UL, which honestly and truthfully, I don't know much about. And if I don't know about it, then I'm not going to speak on it positively or negatively. Next, we have Kroger, which is a company that I know pretty well. I think Kroger's one of those dark horses when it comes to automation, and you could even say AI, and I think that's going to separate them from retailers and grocery stores going forward. I think a lot of people have been slandering Kroger for no reason recently, and I think it's at a pretty good attractive price right now. Next, he has Kraft Heinz, and this is a company that I'm not a biggest fan of, if you couldn't tell already. I think it's just kind of a bland company. I think it's alright. It's just going to be there, but I don't see any crazy growth long term. I'm not a huge fan of this position. Speaking of companies that I'm fans of, though, next company is Target, stock ticker TGT. I think Target right now at these prices is being traded as it's going to go bankrupt, which I think is absolutely ridiculous. Just 2 years ago, people were craving of Target. I've said it before, I think Target is a B/A tier company that is trading at D/F tier quality. I think it's a strong business that it will average out over the long term. With that said, though, I think at these prices, it's hard to say no to Target. Again, I don't think it's the best business in the world, but it's hard to say no to if you have a strong thesis like me. I think at 105 and below is where I'm going to be looking to lump my money into Target next. Next, he has Taiwan Semiconductor, and I think this is definitely a strong play. Next, he has T. Rowe Price, and T. Rowe Price has been slowing down and has been getting killed recently. There are a lot of worries right now that people aren't going to be putting as much money into their work 401ks, and that's concerning a lot of people who are invested in T. Rowe. I think T. Rowe will do alright over the long term, but me personally, I'm not too eager to buy. Next, he has Pepsi, stock ticker PEP, which I think is definitely the epitome, is kind of the ideal golden boy holding for this kind of portfolio. Solid growth, very mature, not going anywhere. Next, he has Rio Tinto, which I don't know much about. Then he has Realty, not Reality Income, which has been trading on a crazy decline this week, and then it had a crazy recovery. Realty Income just acquired Spirit Realty, which many are not happy about, thinking that they overpaid for just more retail, essentially. I don't know how I feel about the deal yet. I'm still kind of letting those thoughts sink in. Next, he has Barrick Gold Corp, which I think is alright. It's not crazy. Next, he has Qualcomm, which I think is an amazing growth driver in the portfolio, and I'm a big fan of this holding. Me personally, I got to do more research on Qualcomm. And lastly is Procter & Gamble, which obviously is just kind of one of those companies like Pepsi. It's like the epitome of the portfolio. It's not going anywhere, some solid growth, but it's not going to be the best of the best. Next, he has McDonald's, and I actually just made a McDonald's mixed stock analysis, which you guys should go check out. I think it's a very well done video. McDonald's is a pretty strong company, especially for being the stage of business that they're in, and they're producing free cash flows at a pretty solid rate. I think this is an amazing growth and maturity option for the portfolio. Then he has MasterCard, which is basically like Visa, which is one of my favorite companies. MasterCard will be an amazing growth play for the portfolio, and they actually were down 5% last week after earnings, which I would think was one of the biggest cases of irrational selling, and even Visa traded down because of it. Then he has Main Street Capital Corp, and I'm not a giant fan of this company. Next, he has Lindell Basel Industries. I don't know much about this one. Then he has Lowe's. I like Lowe's, but their debt is a little concerning, and I prefer Home Depot due to the consistency that they've kind of had. I think Lowe's could have potentially better growth in the future, but I believe that Home Depot has that consistency and still offer some really solid growth. So right now, I'm preferring Home Depot over them, but I'm still doing more research. Then he has Lockheed Martin. I think you can't go wrong with this whatsoever. Then he has OXY. I don't know much about this one. Then he has Nike, and Nike is a company that I definitely think is an underrated stock when it comes to dividend growth and financials overall. Not a lot of people are looking at Nike as like a serious investment, but I do think it's a very high quality business. They have pricing power. I think they have a moat, and they're such a strong brand. Then he owns Medtronic, and I'm not a big fan of Medtronic. Then he owns ING. I don't know much about that. Illinois Tool Works, it's just going to be there. It's not either going up or down. It's just going to kind of provide that slow, steady return. Then he has HP, and I'm not a huge fan of HP. I know he's big on this because Warren Buffett owns it. I think they could be an alright value play, but if you guys know me, my strategy isn't particularly quote-unquote value-oriented. I'm not a deep value investor. Next, he owns JP Morgan, and I don't own any banks, but if I were to, this would be the one I do own. Then he owns Johnson & Johnson, which I mean, it's another company. It's just going to provide you your 7 or 8% return every year, nothing crazy. Then he owns Dow Chemical. I don't like this company. Looking at its financials, I would kind of consider removing that one. Then he owns Broadcom, which I think is an amazing business. Discover Financial Services, which he actually just made a video on. I think this could be a decent play. Then he owns CVS, which is actually down today based off of earnings. I'm not looking into CVS particularly because I already own so much retail, but I think it's a better play than Walgreens if I'm being honest. Talk about some quality retail. Next, we have Costco in here, and you guys already know my thoughts on Costco. I think it's an amazing business. I'm looking to dollar cost average in below $545. Lastly, is a company that he owns in his value portfolio, which is Comcast. Comcast is very interesting because they have an internet part of their business too. It's not just that streaming. And moving on to the final portion of his portfolio, he has AbbVie, which is an SCHD, which has actually been on a bit of a decline this week. I've been learning a lot more about AbbVie in the last few weeks, and I'm kind of reevaluating the position, but I'm definitely going to continue holding, and I'm not going to sell out right now. I think it's a pretty strong pharma company. Next, he owns Citigroup, which I believe is a pretty strong company. Then he owns Cisco, which I'm meh on. I don't love it. I don't really hate it. It's alright. Then he owns Pfizer, which I kind of have the same feelings on. I think Pfizer is a bit of a value and dividend trap, if I'm being completely honest. Me personally, I don't like Pfizer. I actually used to own it way back in the day, but I sold out. And then he owns Intel, and I think Intel could be a solid, healthy and competitive dividend grower. I think Intel could recover and be a good company over the long term, but me personally, I'm not looking at it. Next, he has Microsoft and Apple, which are two of the best companies in the world, and I think there should be more of it in the portfolio, if I'm being honest. But obviously, he wouldn't have that juicy dividend yield that you're looking for in the SHD or dividend income ETF. Microsoft has just had a crazy earnings report, just reaffirming everybody's thesis on them being the best company in the world. Apple's reporting soon, and I think they're another amazing company. Hopefully, in the long term, they will continue to grow their dividend at a more aggressive rate than what they've been doing, but their buybacks have just been insane. Then he owns Best Buy, which I actually think is a bit of an underrated company looking at their financials, and I definitely like it, and I think there could be some growth ahead for them. Then he owns AMT, and if I'm being completely honest, I haven't looked too deep into them, but from the research that I have done, I am impressed. I think it's an alright REIT. I don't think it's crazy good. Then he owns American Express. American Express, I'd rather just own Visa or MasterCard if I'm being completely honest. And lastly, he owns Tencent, which is a holdings company based in China. I'm not a huge fan on this. Another big reason that I didn't invest in the first place is because of the fees that I would have had to pay. I would have already been starting out pretty much a 3 or 4% loss if I wouldn't have invested. So me personally, I'm not looking at Tencent. I don't love them as a holding either. So overall, what are my thoughts on the portfolio? As a dividend quote-unquote ETF, I think it's a very solid ETF. With that said, though, there are some companies that I don't love on here where I think there could be better alternatives, but obviously some of them need to be placed in there for the yield. I want to thank Fiscal for sending the holdings over. I greatly appreciate it. Go check out his channel and the Cash Flow Kings link in description. Thank you all for watching. Once again, please go check out the merchandise. You don't even have to buy it. Just go check it out. It would mean so much to me. If you're going to buy it, let me know again. I'll put you in a video, send a picture of you in it. I think that'd be awesome. Thank you all for watching. Make sure to like, subscribe, and of course, do dividend stocks, not drugs. Have a good one.